What is up, traders? Welcome back to the channel. In today's video I'm going to be giving you the CRT plus SMC strategy for synthetic indices. You can use this strategy to day trade, swing trade, or even scalp. The strategy notes: the first is we wait for a breakout structure with a liquidity sweep. The second is we wait for a pullback into discount or premium of the dealing range. Then we look for an institutional candle. Then we identify the CRT, and then we drop to aligning time frame and execute using a market structure shift plus an order block. I'll show you the entry model as well, and we'll target 50% of CRT, candle range high or low, and the dealing range high or low. So here's the first. We identify the structure. You see, we get a sweep of liquidity here. Even if it closes with the body or with a wick, it just has to go below an old low. Then we break the high, which led to us sweeping liquidity here. That's the breakout structure or change of character, whatever you call it. And then we identify our dealing range when we break a low and we break a high. From this low here to this high, this is our dealing range. And when we pull back into the dealing range, we want to pull back to discount in this case, or if we were bearish, we would want to pull back to premium. So here we have the high and the low, and this is the 50%, which is equilibrium. So we want price to come below equilibrium, and that's when we'll find opportunities around the institutional candle, which will be here. So we want to trade from the discounted PDRA to the dealing range high, or to just the CRT, which will be formed right around here. So now let me show you the institutional candle. So the institutional candle, to simplify it, it just has to be a candle where the wick is bigger than the body. You understand? The wick is bigger than the body. You can see that this wick plus this wick is bigger than this body. Here as well, the color doesn't matter. It just has to be bigger than the body. That's all, and it has to be either in discount or in premium. So this will be the institutional candle here, and we'll tap it into it and form a CRT, and price will rally higher. So this is the CRT. By now I think all of you know the CRT. The accumulation, manipulation, distribution, the power of 3, the CRT. Candle 1, candle 2, candle 3, or we can also get other candles. The entry model. So price breaks a low, breaks a high, we just pull back into the order block. For the entry model, we do not really care about the premium and discount. We just want an order block, and when price rejects or engulfs away from the order block, that's when we enter. This will increase your win rate. Okay, this is a nugget for those who are still watching. This will increase your win rate by far. If you wait for price to react from a PDRA and then execute, and still put your stop loss below here, or even here if you are aggressive, especially if you are aggressive and you put here, price would rarely come back. You understand? So price would have showed you that it wants to go higher. This is an intention. It's showing you that it wants to go higher. So you then execute right here. You can just execute even after an engulfing candle and then just go higher with it. So here is the first example. So what do you see here? Price swept a low, then broke above a high, then we got our candle. Understand, we have our dealing range. This is the low and this is the high, right? Price has to pull back into discount. if we are bullish, you see. And price did pull back into discount here. Discount here is identified by blue and premium by gray. So price pulled back into discount, and we had this PD array here. We formed our CRT candle 1, the candle 2, candle 3. The candle 3 also turtle souped the candle 2. It happens. The lower time frame is what will be important after this candle has been formed. So when candle 2 just closes, just drop to the lower time frame to look for your opportunities. So here is the lower time frame. So price formed this order block here, right? Then we had swept a low, broken a high, we pull back down into the order block, then we react from the order block. We swept the order block, but we didn't close below. If price just sweeps and doesn't close below, it's still valid. And then we execute after this engulfing candle here, this spike candle. That's where we buy, stop loss below the low or below the order block, and then we target candle range high. In this case, the candle range high was also the dealing range high. That's simple. So now let's move to the next example. Here on pane 800, you can clearly see this is a scalp example. The previous one, yeah, it's a day trade and also somehow a scalp. It's more of a day trade. This one is a scalp example of the 30 minutes. We get a sweep here, we get a break, forming our dealing range. Most of the times when scalping, the dealing range high is also the candle range high. And we have our institutional candle here, the order block. And then we drop to the 1 minute. You see price swept a low, broke a high, then price gives us reason that it wants to go higher. And in this case, your entry on the third candle would be right there. So now let me show you another example. Before I show you this example, if you want to learn from me, join the Telegram and tell you more information. If you want to learn how to trade CRT from me. So now this is example 3 on TM volatility 50. This is from Think Markets, link in the description if you want to check out this broker. So we break a high, right? Then we break a low. We have our institutional candle. In this case, we had many institutional candles, but just know that if the first candle closes with a body above the institutional candle, it's invalidated. We stop looking at it. We look at others. But this one also was valid. This one was valid. We had like 3 institutional candles. And then price formed the CRT and we swept the high. Then price rallied lower towards the dealing range low. You see. So here on the 10-minute time frame, we sweep a high, we break a low, we get our order block, price rejects, we execute, stop loss at the high, target the candle range low, or we can also target this dealing range low. That's simple. If you want to learn CRT from me, one-on-one or group mentorship, join the groups below and you'll get more information there. With that, see you in the next video.